Okay, let's jump straight in. Today we're taking a deep dive into the high-octane world of cryptocurrency futures and options trading.
And we're doing it through the lens of the source material you shared with us.
Yeah.
A detailed walkthrough and demo specifically focused on trading on the Delta Exchange India platform.
That's right. Our mission here is, well, to cut through the noise and extract the absolute core concepts, the practical steps you'd need to get started.
Yeah.
And the crucial insights pulled directly from this demo. We want to help you understand how this specific type of trading works, zeroing in on both the incredible potential for riding momentum and generating profit.
And just as importantly, the significant risks that come with it. Because look, anyone following crypto knows altcoins like Bitcoin, Ethereum, Solana, Ripple, they're not just moving a percent or two.
No way.
We're talking 10%, 20%, even 30% price swings daily. That's serious momentum, like in either direction.
And this is where a tool like leverage, which the source discussed, becomes central. They mentioned options for 5x, 10x, 20x.
Sometimes even up to 100x or 200x leverage, which, it's a powerful way to control a much larger position than your initial capital allows, amplifying potential gains dramatically.
Yeah, dramatically is the word.
But, and this is critical, it amplifies the potential losses just as dramatically. The source was very clear that approaching this requires learning step by step because trading in these volatile markets, especially with leverage, is inherently risky.
So let's begin at the beginning then, looking at the platform itself, Delta Exchange India.
Yeah.
What's a key detail about how this platform is set up that the source highlighted right away?
Well, what stands out immediately is their approach to the dollar rate. They use a fixed rate of 85 Indian rupees to the US dollar.
Oh, interesting. Fixed rate.
Yeah, fixed. So it means when you deposit funds, they are reflected based on this rate. And perhaps more importantly for tracking, your profit and loss, your P&L, is also displayed directly in money terms, calculated using that same fixed rate. Makes it kind of straightforward to see.
Okay, so you've seen the platform and want to explore it further. The first hurdle, as with any trading platform, is getting signed up and verified. How did the source walk through that process?
The initial sign-up is pretty standard email or using a Google ID. The critical part is the Know Your Customer, or KYC verification. You have to complete this before you can start trading.
Right, KYC. And the demo focused on the individual verification process, not institutional.
Exactly. This involves phone number verification via a one-time password, or OTP. Then comes ID verification. The source showed you can do this conveniently via a mobile browser by scanning a QR code or, on a computer.
Okay. And they also ask for standard details like your occupation and annual income range.
Yeah, giving examples like 1 to 5 lakhs or 5 to 10 lakhs, those typical ranges mentioned in the demo.
Right.
Then you take a selfie and need to provide your PAN card details. That's India's permanent account number. The platform apparently has a feature to auto-read the details from a capture or upload. And the final step shown was Aadhaar card verification, India's national identity system, which links securely through DigiLocker, requiring another phone number verification via OTP. Once those steps are completed, the KYC is verified. Boom.
All right, account created and verified. Now for the practical step of actually funding that account to trade.
Yes, getting money onto the platform. The first step here is linking and verifying a bank account. This is essential not only for depositing funds, but also for withdrawing any profits or your initial capital later on.
Makes sense. How did they verify the bank account in the demo?
It's a two-step process shown. First, an email OTP for confirmation, followed by the platform making a tiny, 1 rupee test deposit into your linked bank account to confirm it's valid and active.
A 1 rupee deposit. Okay.
Yeah.
Small but effective.
Yeah. Once the bank account is verified, what funding methods did the source demonstrate?
The demo highlighted a couple of key ways. First, UPI India's instant payment system. You enter your UPI ID, the platform generates a QR code, you scan it with your banking app and pay.
And it's fast.
The source noted, interestingly, that although the interface might initially suggest maybe a 15-minute delay, the reflection of funds was instant in their demo. They showed 2,000 rupees appearing right away.
Wow, instant is good. That speed is definitely appealing in a fast market. What about traditional bank transfers?
For bank transfers, they provide specific account details, the account number, IFSC code, bank name, beneficiary name, standard stuff.
But there's a catch, right?
Yeah, a crucial point the source stressed was that for instant reflection using this method, you must use IMPS, another of India's instant payment systems.
Okay, so IMPS specifically.
Yes. They explicitly warned against using MFT with those specific details, saying it would fail. Saving the beneficiary details in your own banking app beforehand was recommended, just to make it smoother.
So IMPS for instant reflection with those details. Got it. Did they mention NFT at all as an option?
Yes, they noted that if you prefer using NEFT, the platform has a separate dedicated bank account specifically for NEFT transfers.
Ah, okay, so you really need to pay attention.
Exactly. You need to be careful to use the correct account details depending on which transfer method you choose. The key takeaway here is understanding the specific payment infrastructure Delta Exchange India uses for quick funding.
Okay, funds are in, reflecting instantly thanks to UPI or IMPS. The gates are open for trading. The source then pivoted to explaining futures trading on the platform.
Right. And what's the main type they offer?
What's fascinating here is that Delta Exchange focuses on perpetual futures. Unlike traditional futures contracts you might see in stock markets, which have fixed expiry dates, current month, next month, far month.
Yeah, those deadlines.
Perpetual futures do not expire.
So if you have a position that's performing well, you don't face that pressure of it expiring soon. You can just hold it.
Theoretically, yes.
Yeah.
You can hold a position for an extended period as long as you manage it correctly. Now, this raises an important question. While you don't have expiry risk, perpetual futures often involve funding costs or payments.
Yeah, the funding rate.
Exactly. That happens regularly between longs and shorts to keep the contract price close to the spot price. The source didn't deep dive into funding rates, but it's a key feature of perpetuals implied by their description, something to be aware of.
Okay. The basic trading mechanics seem straightforward, though. You buy if you anticipate the price moving up.
And you sell if you believe the price will fall. And, crucially, you can initiate a sell position even if you don't own the underlying cryptocurrency first. That's called shorting.
Right, short selling. And it's all done with leverage, which we touched on earlier. The source reiterated that leverage allows you to control a much larger notional trade size than your actual capital.
Yeah, but they strongly advise beginners to stick to lower leverage, perhaps 10x, and definitely steer clear of the much higher 150x or 200x options.
Which brings us to the big risk.
This highlights the most critical risk concept they covered: liquidation. Because you're using leverage, a relatively small adverse price movement can wipe out the margin you've put down for that specific trade.
So, if the market moves against your leverage position, to the point where your unrealized loss equals the margin used,
The platform will automatically close your position at a loss. It does this to prevent your account balance from going negative.
so you could lose your entire margin staked on that specific trade very quickly if the market moves sharply against you, especially with high leverage.
Precisely. This underscores why constantly monitoring your open positions and the running P&L is, well, non-negotiable. You have to watch it.
After covering the basics, the source showed how to actually find something to trade among the roughly 100 cryptocurrencies available. How did they approach that?
They presented a neat trick using external tools, specifically mentioning crypto bubbles and focusing on the RLE, or relative hour live earnings view.
RLE view.
Yeah, relative hour live earnings. It allows you to quickly scan and see which coins have experienced significant percentage gains or losses in a short time frame, like the last hour. Helps identify coins with current momentum.
Right, find what's moving now.
Exactly. The demo used Fartcoin as a somewhat humorous example. Laughs Fartcoin. Seriously.
Yeah, Fartcoin. Just to show how quickly you could spot its recent movement on that tool.
Okay, so you use that as a quick screener, then jump back to the charts on the Delta platform.
Yes, you then look at the price charts for that specific coin, examine the price action, perhaps look at different time frames, maybe a daily chart for the overall trend, or 3 or 5 minute charts for short-term entry-exit points.
Makes sense.
The source also briefly mentioned the potential use of technical indicators like supertrend, ATR, or MACD, suggesting these could be incorporated into a trading logic or strategy, although they didn't, demonstrate building a full strategy in the demo.
They did, however, walk through placing a manual trade based on spotting an opportunity. How did that look step by step?
Okay, so once you've identified a coin and decided whether to go long, buy, or short, sell, you select your desired leverage, let's say 10x as in their example. Then you specify the order size in lots. The demo showed placing a trade for 100 lots. And the platform shows you the required margin for that size and leverage, so you know how much capital you're tying up.
Correct. In the demo, 100 lots at 10x leverage required just $46 of their capital as margin for that position. Then you choose your order type. The demo highlighted 2 main ones.
Market and limit.
Yep. A market order, which executes instantly at the best available price, gets you in right away, and a limit order, where you specify the exact price you want your trade to execute at.
And if you use a limit order, it just waits.
It doesn't execute immediately. It sits in your open orders list and appears as a line on the chart, waiting for the price to actually reach your specified level. If the market moves away, it just remains an open order until you cancel it or it gets filled.
Whereas the market order is for getting into the trade right now.
Exactly. Once placed, the trade appears visually on the chart and in your list of open positions, showing your real-time profit and loss. And that's when the real work begins.
And this is where risk management becomes absolutely crucial the moment that position is live.
Precisely. Given the speed of crypto markets and the effect of leverage, letting a losing position run unchecked can quickly lead to that liquidation we talked about, very quickly.
So what's the key tool the source showed for managing that risk proactively? You can't just watch it nervously.
No, definitely not. The essential tool is setting stop loss, SNL, and take profit, TP orders. This is done directly from your open position. You click on the position and specify the price levels where you want the platform to automatically close your trade.
Like setting an SNL at 4.6 and a TP at 4.65 in the demo example they used?
Exactly like that. These levels then appear as clear lines on your chart, which is helpful visually. The whole point is to predetermine your maximum acceptable loss with the stop loss.
And your target profit level with the take profit.
Right. The position will automatically close if either price is hit, securing profit, or, crucially, limiting potential losses before a full liquidation occurs. This is your essential survival gear in leverage trading. Really can't stress that enough.
Absolutely. Now, beyond futures, the source briefly mentioned that the platform also offers options trading.
They did, but they kept this section quite concise. They noted that options on Delta Exchange have daily expiry, which is interesting.
Daily expiry?
Yeah, daily. And they're available specifically for Bitcoin and Ethereum, BTC and ETH. And you can buy and sell both call and put options, but they were pretty upfront that options trading introduces significant additional complexity.
So not really for beginners jumping straight in?
Probably not. They suggested it would genuinely require a separate deep dive to fully explain. It's a whole different ballgame.
Fair enough. It is a different beast. They then move to another interesting alternative approach they touch upon. Algo trading.
Yes. Algo trading or algorithmic trading. Basically, using pre-programmed logic, essentially a trading robot, to execute trades automatically based on a defined strategy.
The appeal being?
Well, the potential benefits highlighted in the source are compelling. It allows you to trade around the clock, even while you're sleeping or busy with work.
And crucially, it potentially removes the psychological aspect, the fear and greed.
Exactly. It takes the emotional elements like fear, greed, and hesitation, which can be, really detrimental to manual trading decisions out of the equation, relying purely on the coded logic.
So how did the source suggest learning more about that?
They suggested that if you're interested in learning more about their specific approach to algo trading on this platform, you could open a Delta Exchange account, find a specific Telegram link in their description, send a hi message for assistance, and potentially gain access to relevant software and maybe the free webinar. It was presented as a path to explore automating your trading logic if that's something you're interested in.
Interesting option. And finally, the source hinted at further learning opportunities available from them directly.
Yes, they mentioned the possibility of offering a free cryptocurrency course on their channel, depending on listener interest, asking viewers to write free course in the comments.
What would that cover, potentially?
Based on the source's description, this course might cover topics like developing trading strategies, accessing market data sources, how to identify whale entries, those large trades that could signal market moves and methods for predicting momentum. More advanced stuff.
So let's quickly recap this deep dive into the source material about crypto futures and options trading on Delta Exchange India. We've seen the context highly volatile markets, potential for significant profit amplified by leverage.
We walk through the practical steps demonstrated for getting started on this specific platform, from account setup highlighting unique details like the fixed dollar rate and India-specific KYC funding methods like the UPI and IMPS focus,
to the core mechanics of perpetual futures trading, understanding order types like market and limit, and even finding opportunities using external momentum tools like that RLE view.
And we dedicate a significant time, rightly so, to the absolute necessity of understanding and managing risk, particularly the concept of liquidation and the practical application of stop loss and take profit orders. Essential.
It's clear that while the potential exists, Successfully navigating this space requires not just understanding the mechanics shown here, but also diligently managing risk and, ideally, developing a sound trading logic or strategy. It's not just click and profit.
Definitely not. And this raises an important question for you, the listener, to consider as you process this information. Given the extreme speed and volatility inherent in crypto markets and the detailed yet procedural steps shown for setting up accounts, funding, and especially managing risk with SNLTP, how does having this kind of structured mechanical process laid out compare to the very real psychological pressures and rapid decisions you'd face in practice? Does knowing how to manage risk mechanically make it easier to overcome the fear or greed when the market is flashing red or green right there in front of you? Or is that emotional battle completely separate?
That's a great question. Definitely something to chew on. That wraps up this deep dive.